All right, ladies and gentlemen, I hope you guys are having a wonderful evening. I believe this is our first live watch list of the year in 2024, and I got a good one in store for you today. We are going to go over a couple of the plays from yesterday, that $10 into 1,000. We repeated that strategy today. I have another play that costs $0 with 1,000% or $1,000 upside, and then there's another play that we missed out on, which did even better using the same strategy. But more importantly, we need to talk about the stock market and we need to talk about seasonality. So I got a cool little tool I'm going to share with you. We're going to go and play around with this, but I also want you to understand by the end of this why seasonality is so important, especially this year. So like I told you in the beginning, this is a live watch list. So if you're used to watching the normal watch list, youtube.com/the trading fraternity, that is usually just live and straightforward. But today we're going to have some questions. We're going to go back and forth. So if you are watching the recap, I have to let you know, baby, we are live Monday through Friday, 30 minutes before open. YouTube goes. That's the already getting it. YouTube.com/the stock market. This is the live streaming channel, and all of these plays we've been doing, I think even the one in the morning, you should be able to see it at somewhere within like an hour or two in there. We are doing all of these plays live, and tomorrow we have big data with the PCE, so I hope I see you there. So people watching the recap right now, forgive me. I got to say hello to the beautiful Chad, and then we are going to get right into the seasonality lesson, baby. What's going on? Good evening, man. Oh, I'm refreshed. I just got back from the gym, Chatadonia. I'm a night owl sometimes. I'm most of the time, I guess. I don't know. I like the morning too, but I love these lives at night, so it's good to see you, baby. What's going on, Jay? Mr. Tim Whitman, Nathan Evans. Oh, he rocking the badge on this channel. Oh, man, that's a real one right there, baby. God bless you. What up, Daquan? I feel like I'm seeing this in the morning, man. I know it's 10 p.m. I see Daquan in the morning, too. God bless y'all. You on the East Coast, man? Let's go, baby. What's up? How you living, most dope? What up, David? Najee, whoa, baby. Oh, I see you. Hey, Chef around the world. Youngblood, Louie, Harrison. Good evening, you guys. I hope y'all feeling good, man. And honestly, before I even say anything, I hope you wake up tomorrow good, too. You know what I'm saying? Bring some energy tomorrow. Sleep good. You blessed, baby. You ain't got nothing to be intimidated about. It's all going to be good. You like, but it's scary. I know it's scary. Say, no, it's all good, baby. I'm sorry. I get hyped in the evening. I know the people used to the watch list, they going to trip out, but I love y'all. Some of you on the live, y'all be watching the watch list. Y'all on here, too, man. That's it. We got a lot of goodness. You should have saw the it out. I know they wanted to cuck us, but it's okay, man. I'm telling you, we'll even talk about that because I think we could learn a couple of things with how even the earnings played out as well, too. I'm intimidated by my wife only, man. I see you, bro. I see you. I see you, too, Twitch. Nah, not today. It's a YouTube only, man. The firstborn gets it. So, Chatadonia, are you guys ready, man? I need y'all to get the notepads out. If you have any questions, you let me know. I'm going to be here live so we could answer all of them, and then we'll do what we got to do, baby. We'll do what we got to do. Laker, Jay. That's in the morning. See Laker, Jay in here? What's up, man? Yeah, this just started, so we're about to get into it. We are going to talk about stock market seasonality. So, ladies and gentlemen, why is seasonality so important? It has always been a broad overhang for the market. I'm telling you, the data spans back to 1920, 1950. It doesn't matter what's going on. Sometimes the market moves with a lot of specific things going on, but sadly, sometimes the market moves for no rhyme or reason. And a lot of times when that happens, people start to bring up seasonality. So it doesn't matter what's going on, the trend or the type of trading that you do, seasonality is always going to come up. And now here's the thing, it doesn't always play out exactly. That's why I'm really excited to show you a lot of different things. I want to share with you the basic outline of seasonality. We're going to go over the good months, the bad months, and a couple of the anomalies, but it's really important right here, right now, because there is a lot of seasonality at play. Last year, there was a ton of seasonality. That was the insane part. If you guys remember last year, it was like to the T. Right when the month would change, right when the seasons would change, you would actually get a pretty big movement and a lot of follow through. And fortunately, unfortunately, this year does have a lot of similarities to last year. And that's why seasonality, we should talk about this at the beginning of the year. So even besides that, regardless of how you want to go about trading, here's the best part. If you are thinking about making a big trade, if you are thinking about taking money off of the table, seasonality can be one of those guides. Do I think you should go and, oh, well, it's a new month, I'm going to make a big trade, it's a bad month, I'm going to sell off everything? Not necessarily, but if you are going through your analysis and you have reasons to make a certain trade, you could use seasonality as like the fourth or the fifth reason. Does that make sense? Are you following with me? I hope y'all write that down. It's kind of something maybe like a coin toss, but it could help sway the tide to other ideas that you may have, but hopefully you don't fall to the trap of using it as confirmation bias. So, like I told you guys, a lot of seasonality last year. This year, we'll see what happens. And let's start it off with the basic thing. Why? Because we're about to end January 2024, and this is one of the fun facts that comes up with seasonality. The S&P 500 returns since 1928. You'll notice the best month, the first half of July, you are getting about a 2.25% return. That's insane. December, we're going to talk about that being a good month, but hopefully you see what I'm pointing out here. February itself has a very interesting tone. Why? Number one, historically since 1950, this one's from 1928, but since 1950, February and August are usually the worst months for the stock market. So keep that in mind. But here's the little trick about February. The first half of February is usually bullish. The second half of February is usually bearish. So literally, maybe it's Valentine's Day. That's the reason why everybody shows a lot of love till Valentine's Day, and then that's it. After Valentine's Day, people break up, they do a lot of things, and then things start to sell off. I don't know. I'm not blaming Valentine's Day, and that's kind of the nature of all of this seasonality stuff, sadly. It's kind of like a giant horoscope. The only difference is it's just a lot of data. We could go back from 1920 all the way down to 1950 and other times. There's even pre-data, but again, seasonality has shifted a lot throughout the years because at one point, daylight savings and what would happen in seasonality, even like sell in May and go away, there has been very different changes in the United States economy. And when we used to rely on farming, daylight savings would have a big seasonal effect on the economy and the market. Nowadays, you have a very tech service-driven economy. You don't necessarily see that all the time. I still got the wire up here. Is it getting in the way? I don't want you guys distracted. Unless you guys want live news while we're doing all of this, if that's what you're into. I guess so, maybe. But hopefully you're bearing with me. So like I'm saying, we're starting off here in February. You are about to enter February. The market, like last year, it's running up. And if you didn't know, January, December, those are actually some of the better months if you don't include like August and July. There's something called the quote-unquote January effect. It's a weird one because some people say it's bearish and bullish, but it's really about the run from December. But now to start off this month in February, it's looking like if the seasonality was correct, we should have a good start to the month, and then by the second half of the month, it is actually one of the worst returns in history when Februaries go bad. So that's the first thing I want to show you before we get to the calculator. The next thing, I'm just giving you some broader ones. Let's just take a look. This is based off of 20-year averages, and this is from 1950, I believe. The up months for the NASDAQ are usually March, April, July, October, November, and December. The weak months for the NASDAQ are January, February, May, June, August, and September. The best 3 months for the NASDAQ, April, July, and November. The worst months, June, August, and September. As far as the S&P is concerned, S&P likes February. It likes March, April, May. Doesn't like June. Likes July, August, October, November, and December. That's like every single month. The worst months, January, June, and September. The best 3 months for the S&P 500, April, July, and November. The worst months, June and September. As far as the NASDAQ 100, January, March, April, May, July, August, October, November, December. Those are the best months. It does pretty much follow in line with the S&P. The worst months, February, June, and September. The best 3 months, April, July, October, and November. And the worst months, February and September. So This is all broad-based stuff. I hope you guys are seeing this, and what I want you to do is just keep this in your toolbox and just understand if the data is not hitting, if certain things, especially in a market just like last year, if you don't understand what happened last year, there was a lot of fear, a lot of movement, a lot of big policy shift with rates. But think about it. Just like last year, what we are going through right now, there's a lot of wait and see. So imagine you're spending a couple of weeks at a time just waiting for Jerome Powell, waiting for the data to shift, waiting for something to move big, but data and macro data move slow. Are you following along why seasonality may be important? That's why I'm saying with this video, I hope you guys remember all this. Maybe you could come back to it at a later time and just keep this in your toolbox and just have an idea of what the seasons are going to be bringing forward. So with that being said now, I'm honored to give you this cool little tool. I have posted the link in the description of the video here. So if you just go down, it says seasonality calculator. So again, you could come back to this video and maybe my words will encourage you to don't treat it too much like a horoscope and use it to a good point. But right here, right now, you can go through every single month on the stock market from 1950. This is a very great tool. You could go through it literally January 1950 to 23. It separates it into the up years and the down years. So literally last year was a huge January, up 5.8. Again, sometimes with seasonality, if we go back to that other chart, it was telling you some months, even for the NASDAQ, it doesn't really like January. That one's not always going to be up there, but like I said, this isn't a horoscope. I'm a Scorpio. It means the market's going to go up. No, sometimes there is these anomalies. Nothing is set in stone. So like I'm showing you on all of these, it says weak months are January. You go take a look. Last year, even this year, January is on fire. So go back to 2022, though. January was just as bad as it was good for 2023. 2020, we actually had a positive January, even though the market went crazy. 2021, even though the market melted up that year, it was a negative January. And now here's the thing, why I want you to have this website. What are you going to hear this year like you heard last year? People talk about the January effect. Even at the beginning of the year, people were saying the first 5 days of January will create this. Again, there's a lot of history. Even 2021, it was a bad January. That year absolutely ripped, if you do not recall. So keep all of this in mind, but like I'm telling you, we could go through and see the average return for January from 1950 to 2023. It is a positive return of 0.91%. So now for February, this one is the anomaly, but you'll notice February is usually a negative month. This is actually a pretty big deal because once I go through all of these, we'll just do it real quick. Notice negative 0.17. March, positive. April, positive. May, positive. June, barely positive on average. July, positive. August, negative. September, negative. October, positive. November, positive. December, positive. They are all green months except for 3 on average. So this is why this February will be important. And again, we go to February here. And like I'm saying, the tricky part about February, it is green in the first half usually, and then the bad stuff comes at the second half. But let's see what happened recently. Last year, we actually had a bad February. We had a fire January, a bad February. The year before that, 2021, remember, it was a bad January in 2021, and then you had a good February. 2019, you had an amazing February, 3.5. 2022, you had an awful February, down 3.2. In 2020, this was because this was leading into COVID. You were down 8%. And then 2017, that was your last positive one. But you go down the list here, play around with it and see. And another thing, especially with what's going on, this 1970 to 1980, you may want to pay attention to that and how it plays out. But even then, you'll notice it's always 1 year this, 1 year that. It does bounce back and forth. It's very rare that you see kind of a consistent trend. I guess the only trend that I see here is 76, 77, 78, 79, and 80. This was consistently negative February after February after February. So keep that in mind. But now going into March, This one's a pretty positive month, 0.96, and we could see here that's very good. 2020, that was the COVID one, so imagine without that, if you exclude that outlier, March is usually a very good month. I think last year, holy crap, I thought last year would have had a little bit more difficulty, but it was a fire March even though we had SVB. So go down the list here. You'll see Marches can usually bring a lot of steam. And even when they drop, the last time that we had a March that was down more than like 5%, it was in 2001. So for the most part, maybe March will bring us a lot of stuff there. There's definitely a lot of upside potential in the last 10 years, but the only other time that you saw a big 4 or 5% move here, it's probably going to be February. So watch out for that. April, another great month, 1.45. 2020, we went up 16%, surprisingly, and this is where you got to have a lot of caution. Again, the last couple of years have brought a lot of different outliers and effects, but 2022, that was a very bad month. Even though April is a very positive seasonality, you got absolutely wrecked. I think even if we go to November here, November 23, it says 8.7. Which one was it? Was it October? October was negative. I think December, I guess, oh, wait, it's because we bounced up out of nowhere. But remember, I was talking about seasonality last year at the end of the year in November, and what happened, we absolutely dumped, but then it bounced back up in 2 days. So like I'm saying, just because there is a historical average, keep in mind it's an average of all of these dates. So don't use this as your said-all be-all when it's all said and done. But April, usually a positive year, a gain of 1.45. May is kind of neutral but positive, and that's something you can't complain about. 2019, 2012, you did see bad Mays. It does seem like if May does go bad, it really starts to get bad. And then if May is good, only time we had a good May that was like stellar was in 2020 off the recovery. I guess 2018 wasn't bad, and then it laid into a temper tantrum, but not too bad. June, this is where things also kind of a normal break even, but if you do see in the more modern times, 2019, 2020, 2021, 2023, we had very good Junes, but then in June 2022, as part of the rate cuts and everything else, it was a very ugly sight. Or ugly sight to see. And the site for this is in the description. I have that there. It's under Seasonality Calculator. So hopefully you're able to go through this July. And again, I want you to just run it down here for the video, but you should keep this website bookmarked. And like I'm saying, use this as a broader tool to help guide some ideas and just understand what we're getting into. And if you ever wondered how the last month or the last year played out in this month, you could quickly go back here and get that info. July, this is one of the best months. So the market loves July. I mean, you could go through there. There has been bad Julys. 2002, that was down 7.9. But let me tell you this. Are you ready for this? It has been 8 years. Oh, actually, wait a minute. It's been 10 years since you have had a negative July. How do you feel about that? How do you feel? So again, this year, unless something totally awful happens, I mean, you might be able to go back and look at this. It has been literally 10 years if this July goes good. So 9 years since you have had July go negative. So this is usually a very active month for people, and people do really get excited. Again, it's funny, sell in May and go away, and then you have July. But even last year, that's kind of part of the seasonality. You didn't really see a sell in May and go away, but July probably going to be one of your more bullish months there. So let's go to August. This one, quite tricky, but again, just like February and August, these are historically the worst months of the year. So we did have really pretty negative August here back and forth. The last time we had a positive August was 2021. So it's actually, depending on what happens this year, it could potentially be 3 years since we have had a green August. 2020 recovering, that was another one. Other than that, 2018 was a green August, and 2018 ended up being crazy. Then the only other times you saw green August, 2009, 2008, 2007, 2006, they definitely took control of seasonality there. So August, February, these are your negative months. September is also a negative month, but again, it does balance back and forth. You had a positive September in 2019. You were kind of close to it last year, and then we went crazy. towards the end. But 2023, we dropped 5%. 2022, we dropped 8.9. 2021, down 4.8. Even in 2020, even if it had other anomalies, September really was bad. 2002 was an 11%. 08, that's when things got really ugly. That was a 9%. And then the last time you had a green September was in 2019. Then 2018 and 2017, you kind of went on a streak. But other than that, there was a 4-year gap before you started hitting that streak there. So I'm sure September is going to have a lot in store. So keep your eyes out for that. Then October, this one is where it gets really interesting because October sometimes has been known to be bad. Why? Because there has been historical anomalies. You've had major crashes in October. You've had flash crashes and other crises, and that is what led October to kind of have a scary vibe. Again, 2008, October, you dropped 16%. Even in 2018, there was a taper tantrum. I kept mentioning that earlier, but in October, things got really bad. But even though there's kind of a weird fear towards October, again, last October, we did start to go down. I'm sure you remember that. That's before you went on the absolute tear. And here's the thing. If I could add one thing, this is definitely something that we learned from last year. Do you know how these numbers work? And this is the paradox with all of it, because sometimes when you do look at these numbers, they don't really reflect everything that's going on because the market or that month may have been way more volatile than the numbers are letting on. Why? Because it starts at the starting point of the end or the beginning of the month, and then it ends wherever it ends. So why I'm saying that may seem like, of course, Josh, that makes a lot of sense, but take a look at what happened in August. You know, we were just talking about how August played out. It was a negative month, but take note, it went from 4,575 all the way down to 4,300. You were down 5% at one point, and then the second half of the month, keep this in mind for February, you bounced right back up, and then the last day of August, you were barely down just because it bounced up. So it doesn't always show it. Even September, you started here, you were up, and then you were like, till the end of the month, you were barely down, and then it turned into a pretty ugly month. And then once again, even October, here's the thing about October, we still ended negative, but look at that starting point you were at. You dropped, went up, you were actually positive for half of October, and then by the end of it, you were negative, and then sure enough, one day later, you rocketed up, and that's what got you to an all-time high. Ta-da! So that's the only paradox I would say with this, but looking at October, it was a negative month, but says 2.2, but it was coming off of a lot of different things, and then, like we're saying, as you quickly go into November, November was a positive month, and there was a little bit of volatility there, but right when the calendar changed, things changed, and then November is actually a positive month. So like we're saying here, October gets a bad reputation. It's really August and September. Those are the really bad months. October, it just kind of hit or miss. Usually, though, crisis does like to strike in October, unfortunately, or the two big ones you can't forget about. But then November, this is where things get really good because you start going into the end of the year, and this is why people start bringing this one into January, because after November, December, those are usually the best months there. Things start to get better, and it usually has a carry through into January if January is going to be good. Again, January, like you're experiencing it, it's usually a slow month, and if it's not slow, it's going to be good if it has a lot of carryover from November and December. So it's not as if you could get a down year, but here's the funny part. November 2021, we did go down, but prior to that, it was almost another one of those 10-year streaks. It was at least, 8 years over there since you had a negative November, and then the only other time before that was 4 years, and then the other time was 1 year, then 2 years, then 1 year, then 7-year gap, and then a 6-year gap, then 1 year, then 2 year, and then 3-year gap, and then the 80s, I guess it was a little tighter, but 1973, again, part of the inflation stuff, historically good month ended up turning bad. But what do you notice about the last decade? Almost 2 decades at that. Beyond just when it was green, there's something about November, even if it is negative. What do you notice about the negative, my friends? Anybody? I'm going to get you on the live. Yes, we are live. Yeah, it's practically flat. It doesn't really even move that much to begin with, but then when it's positive, Bro, these things are all at least minimum 1%. It has been 12 years since you have had a November produce less than 1%. And then before that, it was another, what? There's only 2 times in the last 21 years that November has produced less than a 1% move. So keep this in mind. November, if it's not going to crash like the other times or be like 1973, probably going to be a very good month. And then finally, December, it is usually a gain of 1.6. There's a couple times, just like November, though, if you exclude these last couple of years, 2018 was a very bad one. This had to do with the taper tantrum and Jerome Powell. I don't know if you guys ever recall. How many of you ever hear me say, people ask me all the time, they're like, is this market scary? Is this market difficult? And I always tell you, nothing really compares to 2018. I don't know if you've noticed going through here on all the little 2018 numbers, how January was, then February of 2018. I'm telling you, the seasonality, how things played out in 2018, bro, it's crazy. 2018 is a very wild year, and sure enough, in December, you had a 10% move down, and that was because of Powell. They were doing a lot of different stuff there, the taper tantrum, quantitative tightening, and it really got bad. 2018 was a nutty-ass year, man. I'm telling you, it was absolutely wild. So other than that, though, December is usually good. And like we're saying, there's not too much of a history, but even in 2002, on the end of the years, I guess it was like September, or where was it? I think April or May 2002, or which one was it? June? Yeah, 2002, in that same June, if you have a good month and then it kind of ends up negative, it could get really, really nutty there because December does play off and it kind of feeds off of that. But all in all, man, this website is for you, man. Go play with it. Keep this bookmarked, and now you will never be caught lacking because the seasonality, and you'll be able to incorporate this to any of your trades. And like we saw last year, man, I can't stress it enough. Yet last year was seasonality to a T. So we'll see how it plays out. But Chattadonia, that is your quick little lesson on seasonality. Before we get into any plays or anything like that, do you have any questions? Is there anything? It's go in the description of this video. It's already there. It's under Seasonality Calculator. The website. So again, let's see. How do you make the YouTube? So if you're on this video right now, if you are typing and asking me this question, let's see how we do it. Let's see. Go to YouTube. We're live right now. Beautiful. So just come to the description, and honestly, you don't even have to click more. It says Seasonality Calculator. It says moneychimp.com. Again, I don't know. I don't really verify this website, but this is one of the best calculators I've seen just because it has it all there, and it goes back to 1950, and I like how it's organized. But just click right there, and it'll take you to the website, and you will be good to go. It's literally bananas. I admire you, man. God bless you. I appreciate that. And if you admire me, get a long-term, bro. That's it, man. I'm telling you. Get a long-term, man, and keep that money safe. And that's it. Get a long-term, bro. I'm telling you. That's the best way to show the admiration, man. For real. For real. Click more when using mobile. All right. Yeah, we gather in the evening. So any other questions about seasonality? If not, this video will be here for the rest of your life, God willing. And I do hope that calculator will help you out a little bit. But now, anything? Final calls? Last call? Well, I'll answer some of your other questions. We'll get into it. But I do want to go over the plays. So I just want to go over a quick little play here. We talked about it yesterday. You guys remember the ghetto spread. We did do another $200 of options, and they all got clapped. And actually, since I'm going over the earnings strategy here, I want to show you the one. We got another free play with $1,000 upside, and that's its own little strategy. But I'll tell you now, next week, I am going to play a bunch more earnings. We started off very strong. The last 3 days, we've gotten clapped, or the last 2 days. But here's the deal. What have you noticed about earnings? And this is just like seasonality, so this does not mean that it's always going to happen, but there is kind of an observation, and I knew this in the back of my mind, but it's starting to stick out right now. Well, two standard deviations is baby. Think about it. Seasonality, right? We're talking seasonality. There's something there. You got to think about it. The deviations are important. But what else? You could trade after the report. That's what we're going to go over next. I'm going to show you these plays, and that's always been part of the toolbox, and I'm going to show you what we could do with it, but there's something else. It's kind of obvious. It's obvious. Cat is obvious. Is that what they say? Yeah, there you go, Harrison. Ghetto seasonality. Bro, low-key, earnings in the beginning of the week, those are the ones that are probably going to hit. As you start getting towards the end of the week, they don't move the same. And then one thing else I've noticed, the ones that only have February contracts, believe it or not, if it doesn't have a weekly, those also don't do as well too. But for real, I mean, if you think about it, we were hitting strong in the beginning. Even last week, the other ones, I mean, FedEx was on a Friday. You know what I'm saying? So FedEx, that was one that we had like 2,000% on. That's kind of what started all of this. But that one was like a Thursday, Friday. Even the Nikes were towards the end of the week. But so far, keep this in mind for next week, though. If some of these plays, even the big dogs, especially just like Intel, pretty much if they, I'll tell you this now, if they report later in the week and they already made a gigantic ass move, maybe that was already the move right there. So keep that in mind, but now let's talk about the plays, and this is now the next part of it. I was kicking myself today because we were going after it, and this is what I told you guys on the watch list. If you don't remember what we did on Netflix, we played it post-earnings. Where is this POS? So right here. The other day, Netflix in the morning after their report, we didn't make a play on earnings because we said 2 standard deviations was too expensive. It didn't really make sense, right? So what did we end up doing? We said we're not going to touch Netflix. Even if it moves up, it's probably not going to pay out. And sure enough, it didn't really pay out. It really depends on how close to the money you were and how much you were willing to risk. But we played it 2 minutes after the bell, and I grabbed a $600 call for $75. 4 minutes later, that play went, the stock started running up, and the play further outside of the money, that went up to $84. So I shorted the play that has less probability of becoming profitable, and the one where if I lose on this play, I must win on this play. Don't you ever forget that. This is the ghetto spread. But the whole general logic is that you buy a play and then you short the other play that is worse off for more money than what you spent or the same amount of money. Why? Because if you lose on the short, you are guaranteed a win on the long end. So that's what we did yesterday. Literally, I got paid $9 to have an upside of $1,000 on Netflix. So worst case scenario, I walk away with $9, and even then, if Netflix rockets up, I could sell out at any moment. That's the thing. You don't have to hold this till expiration. This contract will always move less than this contract. So you don't really have to do anything or worry about it. So that is the idea that we went after, and I made this video yesterday, and we were talking about it, and I did the same thing today on Tesla. So unfortunately, I wanted another play, but this is something too. Towards the end of the week or even after any of them, it's very simple. If any of these earnings, if there is like a big earnings move, even tomorrow, I don't think we had any, but the example today was IBM, you should always look for the post earnings. You could still play them small, but ideally, because the volatility in the morning and the options are crazy, your first thought should be ghetto spread. Yes, this is live, my friend. So we did it today on Tesla. So what I ended up doing, again, Tesla did bad. I thought they would do a lot worse. It was a really bad earnings, and lately the continuations have been fire. So what did I do? I waited I think I waited a little longer today. Let's see. Netflix, Disney. Yeah, Tesla. So here it is. I waited 4 minutes, actually. So I waited 2 extra minutes than the other one. And if you want to know the reason why, which ones did we get? We got the 170 puts for 73 cents. I grabbed next week. All of these, I'm making sure I get time, but 170, I believe the 180s, this would have been 2 standard deviations, but when they opened up in the morning, I didn't want to spend $200. Are you following here? Why? Because the company just reported sometimes these earnings, post-earnings, they could flip in a heartbeat. I don't want to spend $200 in the morning because that could quickly turn into $50 or something like that. So in my mind, I said 180 would have been the 2 standard deviations from the day before. So instead of going there, I said I want to spend less money. I also want to get a place marker because if I lose on the 170, then I could go for the 180. Let me say that one more time. You often hear me talk about a place marker. What do I mean by that? If I want to play, but I'm also worried about how the options are going to move in the stock, I get a place marker. And in this case, what I am doing is I want to spend more money, but I don't start off by spending a lot of money. Why? Because I don't want to throw my best army out first. The idea is I go for the worst play to monitor the premium and see how it moves. And then the general idea is if I miss on this play, what's going to happen? If I do bad on this play, the better plays, like I told you, I wanted the 180. I want that 2 standard deviations. So now, if I miss on this play, the higher quality play will come down in value, and then I could be able to pick it up. So that's what I was waiting for today on this one, but it did take off. We bought the 170, and I spent $75 for it. I actually was like almost at the bottom there. I almost bottom ticked it by taking advantage of those morning moves. It rocketed up to $1.23. It did come back to 67, so it went a little bit lower about 30 minutes later, and then it started to take off. So this one, remember, Netflix, it only took me 4 minutes, but in this case, I bought it at what? I bought it at 9:30, and then I ghetto spreaded it at 12:29. So 9, 10, 11, 12. It took me about 3 hours. Yes, we are live. Oh, I forgot to put out a stream alert. No. Oh, man, that's the one thing I forgot. I knew I was forgetting something. You don't need to own 100 shares to sell the call as long as you own the call, right? So look in this case, or even the put. So remember, I bought the 170 in the morning for 70 cents, and then 3 hours later, Tesla started dropping, and then I shorted the 160, as you see here. Where is it? 160 for $73. I literally got my money back. So this thing went to the price I paid, but this option is now $10 out of the money. How am I allowed to do this? Because I own the right at 170. So somebody said they'll agree to buy it from me at 170. I said I'll sell it to you at 160. So I got the same amount of money for my play, and now the strike prices are $10 apart. So that means I literally spent $0, and by next week, whatever this play goes to, there's going to be value. I could take out my value at any time, or let's say by expiration next week, if the stock comes down to 160 or anywhere in between, I am guaranteed money. But now, if anything goes wrong, just like options, we had a Procter & Gamble the other day, and this play came back up today. This was that earnings play. We had a couple of, I think we had 500% at one point, and then it came down. Where is it? It's actually came back up. Hold on, I got to connect it. But this play, dude, I bought this play for 30 cents. It shot up to $2.50, and then guess what? You came back down to 35 cents. $40 on the next day. So this could happen with earnings and options. Nothing is guaranteed. So this is the advantage now of being able to take the risk in the morning, make the move, and then lower your risk. So this one, I paid for it already with the other plays, even though I've lost on the other ones. But now if we get a good profit, it'll pay for everything else. You see, one winner could go a long way here on these cheap ones. But the general idea here is by doing this ghetto spread on the post earnings, I'm able to lower my risk and give me upside. I mean, worst case scenario, you're going to have a portfolio full of upside, but you will not lose any money. So that's what we did yesterday on Netflix. Free earnings play. Did it today with Tesla. Free earnings play. Now, here's the deal. I wanted to do this today on IBM. I whiffed it heavy because this one just started moving faster. So, again, the 190s, those were the 2 standard deviations at the time, and they opened up at 90. They were from 40. This is why I didn't like it as much, because if you looked at the Teslas didn't go up like this. But even then, I started looking at the 197s. These were barely up. I wanted to do the post-earnings continuation. So, keep it in mind, but this one I whiffed on. You could have made, and here's the other point now. here is the next big earnings thing. There's pre-earnings run-up, post-earnings, and then what I'm showing you with the standard deviations, the ghetto standard deviations. But I hope none of you forget, if you don't want to make the play towards the end of the week, you're noticing, the companies aren't that good, you can always wait till the morning of. Now, just like there's some instances, like IBM, the morning of, you had a couple of minutes. After 3 minutes, it took off. Literally, after 3 minutes, it went up. But what did you notice about the Tesla? What is the risk with the post-earnings? Anybody know? It's staring you right in the eyes right now. This is why we like the ghetto spread and we want to make it cheap. What is the risk? Post-earnings, if you get it quickly and it has a continuation, you could literally get the earnings play without ever having to play the earnings. Literally, IBM was 1,000% in an hour if you just played it post-earnings. Yeah. The same thing that could help you in this scenario can also hurt you. So that's where I'm saying that being fast is good, but it could also be the thing that being fast is good if there's not a wall, is the best way I could put it. So it's literally, you could have went down. This is where we snagged them. We got a good deal, and then it rockets up. Oh, wait, that's the 160s. Where's the 170? That's the one we played, but that was a great example of it. I'm on IBM. I'm sorry. It's a very sharp double-edged sword. So that's why, again, even with the Tesla, if you're at, like, why did I keep it small? That's why I'm telling you how to combat this. That's why I told you place marker in the beginning. How do you combat this issue? You go small. That's it. Because then if it's small and you hit 1,000%, you're still going to be happy. But then if you go small and then it does the retracement and it really starts to drop a lot, what can you do? You can now get a way better play, or you could wait it out and say, all right, maybe we're not going to go for it. But the risk is, like, literally the same play I bought went up 100% in 4 minutes, and then 30 minutes later came back down and then proceeded to rip after that. So that's what you got to watch out for when it's all said and done. That is the only issue with playing this. But this is now, I mean, I hope you guys are seeing it, and I'm very excited for next week, and I hope you guys are learning. But do you guys not realize it? You have a whole entire toolkit for trading earnings with a little bit amount of money. You should know about the pre-earnings run-up. You now know post-earnings, small amount, place marker, ghetto spread. You can walk away with a bunch of free plays. And now, even before the event, you know how to go for the 2 standard deviations. So we got one more week of big ones, and that's what I'm saying. Here's the deal. You saw this week, we hit the first ones. If you held long on some of them, you really loved it. I sold out early on a couple. I'm glad even the Procter & Gamble comes up. That makes up for my whole entire day today. Do you see what I'm saying? And remember, then you're coming off the TSM, and then you also had the 3M. You got to stay alive. You do that by controlling the budget and keeping it small. You see what I'm saying? Because I want you to have all these tools. I do not want you any undeterredness from going into next week. You see what I'm saying? Because now we're going to have a whole nother set of 100 and something earnings. If you're keeping these below $200, $300 for several plays, you're going to have a lot. And again, even like Logi kind of came back in all of that. But the general idea is use this now to scan for your opportunities next week. You could go pre, you could go during, you could go afterwards. And then again, ghetto spread and some of those factors, they are really going to help you out. So that's what I had to share with you. I'm glad we got to do 2 days in a row of some of these ghetto spreads. I'm excited for tomorrow. Our intel was up, and now we're going to get cucked, but let's see what the post earnings provides on this one. Again, we will have intel. I think that'll be the big one tomorrow. Visa, I think it's still within 1 standard deviation, sadly. So the ones that really continued were the ones that already kind of were at the cusp of 2 standard deviation. Then they took off, but anything could happen. We'll see what happens there. But Chattadonia, that is all I have for you. So let's bring this to a wrap-up right now. Is there any questions? Do you have any other questions? And hold on, I need to see. I don't know if somebody came into my house. It was my girlfriend if they didn't try to kill me. Yeah, okay, it was my girlfriend. Just making sure. Making sure. What does 2 standard deviation mean? It means you should go watch the video because I love you. But that's exactly what it means. So I could go get it for you now. You could listen to it while you go to bed, and then that way we could really connect and bond over it, and then it'll be ingrained in your head and you'll never forget it. But I posted a lot of tutorials so far this year, but here it is. The easiest strategy. Oh man, I hope you turn $600 into $6,000 or $7,000. Had a wonderful day. So it's only the second. So this is the video. I'll post it here in the chat. That's what you got to do. That's what you got to do. There it is, man. There it is. Thank you for everything. It's my pleasure if you're using it. You know what I'm saying? And I'm telling you, I love to see y'all learn and like fuck a market maker, fuck Wall Street. I usually don't cuss on the watch list videos, but like, you know what I'm saying, man? I want y'all empowered, man. Y'all in the cult. God is good. Finger to the sky. But that's why I'm saying, though, I was very disappointed, though, today where I'm like, dude, like, listen, if you're going to gamble, have your gambling budget. Be wise. But, like, I'm not showing you this stuff so that you, like don't mess up your shit by knowing this. I want you to understand more so you have tools to better protect yourself. Don't use this to hurt you. You know what I'm saying? Like all of the plays, like I'm saying, you keep them small. They won't hurt if you keep them small. But even then, you're like, well, even if 200's a lot to you, you got to change it up then. That will be a lot. So it's like, don't hurt yourself and don't let this stuff work against you. That is the craziest part about all of this, because it's like I could teach you a lot and it could help you out, but this could all be used against you. This is like talking to the police without a lawyer. It don't matter. Even if you're innocent, you might spend 10 years in jail. I don't know. The whole idea is it can and will be used against you. It's like this is playing with fire when it's all said and done. So I really hope that, you know, that it makes me proud to teach you guys, and I love to see people really getting something out of it. But also at the same time too, it's all about how you use this. You know what I'm saying? Because like you could use this, treat it like it's nothing. You could use it to only gamble and not use this as an extensive toolbox. You know, I want you to have multiple tools for multiple situations. So that's what it comes down to, baby. That's what it comes down to. Use it, don't abuse it. It's not. It'll abuse you. You know what I'm saying? It's not like I'm not teaching you something that you can abuse. If you don't use it properly, it will abuse you. It will violate you with no mercy. This market got no love, bro. So you got to always keep that in mind. The 3 phases of earnings are number 1, the pre-earnings run-up. So you already got to see that. Where did you see it? Intel. And I did a lot of these last year. Again, this year, with how things were, I like the 2 standard deviation plays a lot, but you have seen me go early. Even on JP Morgan, I tried to go early. So if you go and price in 2%, even if you don't price in 2% and just want to go for the really far out the money plays, and if you go and play 1 week, 2 weeks ahead of earnings, that is buying the play on the option so you could flip the premium as everybody gets hyped into earnings. So Intel was a beautiful example because, again, like I told you on last Friday when we made the play, everybody was going ape over all of the earnings there on SMCI and everything else, so we bought the play. So then literally leading into earnings, the IV, the pricing jacked up. That's the pre-earnings. That's phase number 1. Right? Phase number 2 is what I've been showing you guys through the tutorial. Ghetto standard deviation is phase number 2. You arrive day before earnings. You didn't make a pre-run-up play. You don't have anything. What do? You go to the option chain. You see what's priced in, and then you could go off of what's priced in, or you could disagree with the market maker, and you could go for 2 standard deviations. That is phase number 2. Then phase number 3 is what we've done with Netflix and Tesla. Netflix is the best example because I didn't have a play on it. Netflix, you know, there was kind of a pre-earnings run-up. Let's take a look. If you see some of the calls leading into it, they did kind of run up there, right? You see these when earnings was there. But like if you bought these at $2.15, you were up $3 just 2 days ahead of earnings on the run-up. That was phase number 1. By phase number 2, like we did on Netflix, we said that's too expensive. They want 20% for 2 standard deviations. They want at the money 10%, too expensive. We didn't play it, but then you play it afterwards. You were able to snag some. Which ones did we get? We got the 600s. Damn, those have 16,000 calls. Jeez. But again, that's crazy. This one was a good one. So, like, literally, take a look. The day after, or no, we got to go 3. That's why we have to go. But literally, that same call, I bought it for like what? I think we paid 70, 80 cents for it or something. Where was it? It's a letter to the people. I paid 75 cents for the Netflix. Damn, that was another good one at the bottom. But literally, isn't that crazy? I played Netflix and I got the play cheaper than what it was going for the day of earnings. But then this is the post-earnings play, phase number 3, just like we did with Tesla as well. So there you go. Those are your 3 steps of earnings. Those are your 3. But again, it's all up to you. How you don't have to. It's not 1, 2, 3. Do it in order. Follow rules. I'm a robot. It's hey, you could look at the option chain, look at the pricing, understand the company. If you have certain ideas, if you notice certain trends, you can now find ways to navigate throughout all of it. And then again, above all else, just watch your budget and watch your balance. So anything else? Any other questions? I'm up late. It's 8 o'clock. I haven't played 2K though. I didn't play 2K yesterday. I hit the gym, man. You know what I'm saying? I miss you too, Jonah. I hope you're living good, baby. Let's go, man. Living life. You still making apps? You making good apps? You got to be making AI apps now too, huh? I'm sure you're going to be on that. You think it's time for some change in seasonality? Do you see it continuing the current trend? I think we're in a modern era of it. I think some seasonality will broadly be sticky. I don't think some will change. And then again, there's always room for anomaly. But at the same time, like, you know, the modern era, like we've seen certain things operate a little differently, but it's kind of hard to pinpoint it. You know what I'm saying? Like, I don't know which way it'll go, but I wouldn't be opposed to change. Very good question. Man, hooking people up, man. Hey, man, as long as you learn, some people, hey, they're gonna get in and out and do what they need to do with it. And but those of you who walk away understanding, that's is gonna be with you forever. Fuck the last few days, you know what I'm saying? So like I'm saying, I really hope y'all are in on it, man, and get it to the point where you don't even have to make a play. Look at what's happening. Look at the prices. Look at the results of all of it. Just priced in, bro. Priced in, bro. Priced in, man. What happens when I keep waiting on a pullback for a good entry, but it keeps running up? Well, you lose. That's it. You lose by not getting it and just move on. Don't FOMO into it. You can FOMO with cheap amounts. That, like I was saying, you could try to place marker it, but then if you do the place marker, make sure it's really small, and if it doesn't work, you're screwed. But again, that's what happened to me on IBM. So, like, if I could have done IBM today a little better, I told you, I grabbed the Netflix, the same idea, it would have worked. IBM I had the damn contract in front of all of you. It would have killed it. I hit the Tesla. I went for that one, and then I'm waiting. I thought it was going to pull back a little bit more, but it didn't. So I could have been very good with this play by going cheap. I should have just bought me a $20 one. I still could have made like 500-600%. But like I'm saying, just keep it very small is the only way. Other than that, though, I missed out right when it started going up 500%. I just, I looked at it. I'll get bothered by it, or like, I should have had it. But that's it. You lose. But at the same time, it's either you're going to FOMO a small amount or you walk away. Walk away, Bob. Walk away. Does Bob walk away? Or no, that's Regis. I'm going to walk away, Regis. Who wants to be a millionaire? I haven't touched options since the MNQ short. I'm ready to get back in the game after these 2 weeks. Got to keep it small, though. That's it. These options are just as unforgiving. The only advantage compared to like a MNQ, you know what you're going to lose. So Openface asked me, he was like, why are you trading these options? Why don't you go for the shares? And I just said, the market's at fucking all-time highs right now. I don't want to buy shares and be stuck to something at a really big high if something starts to flip, because even though the shares are optimal to squeeze out the money, because like you're saying, you saw a bunch of earnings moves the last 2 days, and guess what? The market maker won. If you were on shares and just caught any move, you would have made money. But if anything gets its knees taken out, I don't want to have the shares on there when we're hanging at certain levels. But I did say this. What I would go shares on is non-earnings companies that are value plays at the low. I'll buy Baidu with shares. I'll buy Baba with shares. I'm probably going to double dip with Pfizer on shares. You know what I'm saying? If it's already at the low, I don't give a shit. Maybe it flushes even more. That's fine with me. But at the highs, that's the danger there in this type of market. So options does provide an advantage. But then again, I've been trading some cheap-ass options. Like, I don't know if y'all realize it. I'm throwing $20, $30. I think the most expensive option play was Tesla in the last, like, 2 or 3 weeks. You know what I'm saying? Like, I'm keeping them hella small, like, super duper small. So that's the only way I see it working there. So just, like, especially if you're going timid or you want to, prevent any losses, being small ain't going to hurt. It'll kill you death by 1,000 cuts, but that's why if you're zoning in on certain plays, using some of this, I think you could limit the opportunities. Then again, if you're spending a little bit amount of money, I mean, it shouldn't be able to work too much against you. So we'll see. I'm 20 years old. Do you have any stories when you were 20? I don't know about, like, I was in my 20s when I got, like, a China crash. I went crazy. I thought the world was going to end, and I turned $2,000 into $250,000 on one trade. That was fun. But then I've had a lot of crazy stuff. I got into Bitcoin in my 20s. But yeah, I'm still in my 20s, I think. I got to check my fucking ID. I'm still pretty young, but I don't know. It's still just there's a lot, man. You never heard that? I have a video of it. I got an old video. I have a recording of my P&L. I recorded it that day. I recorded every day even back then. I have most of my trading days recorded. It's pretty dope. So there's a lot, yeah. But the first China devaluation, I don't want to say I predicted it, but it happened, and everybody, Jim Cramer was like, nothing's going on. I was like, dude, this is huge. And I made some crazy bets, and then, like, I was full tinfoil, though, bro. I was fully tinfoil, and I hit a fat play off of it. It was like tinfoil macroeconomics, bro. Like, I was borderline thought the rapture was going to happen. I'm not even going to lie to you, man. Yeah, I'm not even going to lie to you about that, man. I thought the rapture was next. That's how you know I was young. That's how you know. You know what I'm saying? And I'm like, oh shit, bro, this is crazy. No, for real. I'm not lying to you, bro. I straight up thought the rapture was next. Now, I started pricing in the rapture. I'm mad. I started looking at properties in Reno, Nevada, just for fresh water access. I wish I bought one, though, because then Elon went there afterwards, and those all skyrocketed. But, yeah, man. It'd be like that. It'd be like that, man, yeah. Hot is good, though, man. Amen, bro. That's it. And, like, I don't know. We had some talks today, bro. You in your 20s, bro? Y'all got time, bro. I was telling everybody today, man, you could get whatever you want. The answer is time. So, for real, like, some of y'all young and you in your 20s, man, like, make the most of it, but, like, don't rush yourself, because you could have anything you want with time. You tell me what you want, I could get it for you. The answer is going to be time. That's all that matters. You want $1 million, you're going to get it. How long it takes is the only answer. But it's just like, for real, as long as you don't rush yourself. I know the world is, you need to have drive, though. You know what I'm saying? It's like, I can't give you the drive, but no matter what, just like, don't underestimate how little by little you could build, especially when you're young. And it's just like, even the little hundred, that's the paradox. With like all of the earnings and all these plays, like, I hope you see the paradox, because like all these little $100, $200, 100 here, 50 here, it's just like, dude, if you're young and you start just stacking those 50s, those $100, instead of losing it, instead of, putting it towards drugs or whatever. And again, I'm not to do whatever the fuck you want. I really don't. I fucked around a lot, bro. That's like, it's only because of God that I am here right now. You have no idea. So, and again, I'm glad to learn, and I hope that my experience I could even share with you a little bit. But it's just like, dude, all of those little amounts of money, man, you put it in the right areas, you stack it up, you get it towards a long term, even just save it little by little. You may think you don't have anything. Oh, you're going to walk away with something big. So that's the number one thing, man. We had this talk today because people were talking about debt and other things. I'm like, dude, for real, it's like that really be the answer. And a lot of people, especially when you're young, it's just like, I understand. I've been young. Like I said, I'm still pretty young when it's all said and done, but like, I totally get it. And again, I see people nowadays, even my friends, when I look at the difference between me and some of my friends and people I grew up with, that's all it was. That's really all. Like, I'm telling you, man, I knew people who are making way more money than I ever was. I don't think y'all realize it. You don't know that? You ever had people, there's people in your life who are making way more money than you are making right now. You're in high school, college, just getting out of college, and you will be able to surpass them by an exponential amount because it doesn't matter how much money you're making. It's literally about how much you keep and what you do with it and putting it into certain areas. Again, I invested. Again, saving and putting it towards real estate. Literally, the stocks, the long term is freedom, man. And that's all. And like I said, though, it's time. How long are you willing to wait? Because it does require sacrifice. I don't say this like it's all roses, bro. Like, again, my 21st birthday, I didn't go to a bar. I was playing Call of Duty, but I wasn't buying nothing, bro. Again, 18, I wasn't doing, even then I was still partying, not my birthday, but I was doing other things. But like, I was really cheap. Even when I started making money, I said, I'll party if you pay for it. I have one homie to this, you know how I told you guys, that one homie who I always give Ethereum and Bitcoin to. This was like one of my best homies. I love this. I'll die for this dude. He's like, don't die, Josh. But literally, I love this guy, man. You have no idea. This guy was lapping me. I was even touching some bread, bro. And I thought I was like, for where I came from, dude, that shit, I was feeling good. You know what I'm saying? And this dude, I had nothing compared to him. Absolutely nothing. And it's funny because, like, he would always take me out. So I don't know. You either got to make a sacrifice or go find a friend who's going to fund you. Because this guy paid for every club I ever went to. I never paid for a bottle in my life. But my homie did. And that's why. Nowadays, I'm like, here, taking Ethereum, bro. I got you, man. That's it. I got him. I hook him up now. That's it. I paid him back. With dividends now. But it's just like, dude, at the end of the day, though, it's like certain things, though, I did sacrifices. I wasn't doing it. Like, I mean, that's it. I mean, I think Uncle says it. I was chilling in my room. They were chilling at the bar. You know what I'm saying? And it's just like, and eventually you'll see it, man. Like, you'll make certain sacrifices and people won't really understand it. And you may feel like you're missing out on shit, but you're not. Because down the road, people will want to do what you are doing. And then they're going to ask you about it later. And that's why I said earlier, just it's harder to unwind more bad habits than it is to just start now. So, but it's time. Is, however, if you want to sacrifice little, it's going to take more time. If you want to sacrifice more, it will take less time. That's the simple formula. That's all. So your friends, family, social life, your health even, because I even sacrificed some of that. That's why that's why I got to get back in the gym. You know what I'm saying? That's why I do make health an important part of it. Those all are factored into it. So if you want to make less sacrifices, I'm not saying you won't get to your destination. You will, but it will take more time. If you make a lot of sacrifices, it is going to speed up that process for sure. And that's the simple formula to all of it. Amen? Amen. Instructions unclear. Funding Fred. No, you got it. That's only if you want to party, bro. You got to find you the one friend who will pay for your bottles if he wants to hang out with you and he's down and he's like, my friend was just a really good-hearted person, bro. I'm telling you. He would hook up everybody, man, and it was just like, again, he wasn't really good with the money, but at the same time, like, the dude had so much love, bro. I'm telling you. He yelled at me like maybe once or twice in my life And then I told you he's the one. I had a friend. I saw him get real mad at one of my homies I introduced him to, who was throwing his life away. It was that I told you about that. That was that guy who went crazy on his mom's credit card and shit for the fucking my player shit, man. And I remember he went off on him before, and that was the one time. But like other than that, like he was just like I just he had a lot of love, man. So God bless you, bro. God bless you, man. But at the end of the day, though, it's not like there is more important stuff, than just partying. But I don't know what's important to you. Do you know what I'm saying? Like when I tell you that, like when I say all of this, all of us are very different. But like I don't know what's important to you. Some of you, man, it's like it's important to party for you. Again, at certain times in my life, I felt like I was missing out if I wasn't doing this. Some of y'all, it's important to get high. I don't, that's just where you're at in life. It's important for you to wear nice clothes. You know what I'm saying? It's important for you to feel a certain way. I don't know what's important to you. So that's where you got to really figure out all of that, and that's what it comes down to. But like I'm saying, the sooner you figure it out, man, the better. But take hope and take faith in that you can get whatever you want with enough time. So that being said, that's been an hour and 5 minutes, man. Hour and 5 minutes. Hour and 5 minutes. Is there anything else, man? Last one? What you got? Last one, or can we gonna wrap it up? My 2 baby brothers are important. Bro, honestly, then start teaching them what you're learning now. That's it, man. I'm thankful. My brother's a lot older than me, and homeboy I grew up fast because of him. I had other siblings too, and they were all older. But like, if that's what you value, bro, start showing them stocks. Start treating them like they're old already, cause that one will go a long, long way, bro. That will go a long way. I'm telling you. Inflation. GG. Bless it. Am I going long on Snap? I'm still long on Snap. So that's we're like up on it, I think. Our kids start them off right. Amen, man. Amen. How old am I? I said it, man. I'm old enough to be your daddy, young enough to date your mama. Woo. It's cool though. I think I'm at a perfect age. Like honestly, I'm very versatile. That's it. If I didn't have a receding hairline, I would blend in so well with every age group. You know that the boomers love me. The middle-aged love me. The young people, like I'm telling you, if I didn't have this damn hairline exposing me, I got a couple of wrinkles, but like my skin pretty good besides that. That's it, bro. I'm telling you. Is the hairline the only thing exposing me, man. That's the only thing exposing me. I can see that happening. What? Are you trying to hook me up with your mom? No, I'm trying to figure out where this is going. Hold on. As long as it didn't thin. No, bro, it's just falling off. That's it, man. It's falling off. You have no idea. The top, I take the top off. That's it. That's the only cool thing I could say because of it. I could just say a Gunna song. I took the top off. My hair dripping like hot sauce. I've accepted everything in life, man. I'm a very accepting person, bro. That's it. You get rejected enough in life, you either magnify it and become awful, or you learn to accept even more. I've taken the acceptance route. You know what I'm saying? So it's good, bro. It's good. Did I ask it not to fall out? No. I don't know. My sister, because like she works in the medical field, and like I told her, remember I told you like my toes, I got like a little rash on them, and I asked her about it, and she like told me like what to do. And then she was like, and then make sure when you clean your toes, you got to tell them, say, I love you, little toesy woesies. And she told me to say that to them when I clean them. And like, she was just kidding, right? But like, I'm not going to lie to you, bro. The other day I was doing it. Like I was cleaning my feet in the shower. And like I straight up like I was just like I love you little toesy woesies and like so I don't know man maybe I'll try the hairline thing. Yeah, it works. Nah, bro, I did it. Like I didn't know. Like I did it. I'm not gonna lie to you. I did it, man. I did it. I did. I straight up. I was hyping them up, man. Like I felt so dumb, but I was like, man, she got me. She got me, man. I don't know. Mm-mm. I'm down on Snap. You have it at 18. It's at 16. Yeah, but I sold covered calls, so I've gotten back I think 3,700. So my cost basis, I don't know how many 3,700. If it's 18, what would that be? Like three? I think it lowers our cost basis like $2 or something, maybe three. Either way, we'll see. This channel is different than the live channel. Yeah, live channel is youtube.com/the stock market. Josh talking to his toes is believable and unbelievable at the same time. I know. I know. All right, chat. I'm hungry. I got to get going, man. I love you all. I hope you guys have a wonderful evening. I'm ending it with the toe conversation. I don't know if that's a good strat, but be safe. Enjoy your night. Wake up and drive, man. Wake up and drive and do your thing. Do your thing, 21. Wake up and drive, man. That's all you got to do. It's a Friday, baby, so enjoy it. Thank you all again for being here, and hopefully you keep this video as the seasonality. You could always come back to it, and then we will go from there. But I love you all. Have a wonderful evening. Finger to the sky, and peace out. Yeah, hit the horn.